Welcome and thank you for joining. My name is Dylan and this is Forexia. Find out more at forexia.net, or you can check out our online community, Forex community.online. Type that in to your browser right up there and click enter and you'll find us. So, what are we doing today? Today, I decided to go live right now and trade a M. Yeah, that's right, an M for you guys. Okay, this is live. I'm not like photoshopping this or anything. I'm going to show you guys because I see a lot of people still having trouble determining when to enter or entering at the wrong time and just getting very bad risk reward ratios. So here we can see GBPJPY. It made its way up to the 800 moving average, right? And right now it looks like this was a big fake out to the upside, and now it looks like this could be the first leg of the M, and this the second leg. So we are at the point in time today that we could definitely see a reversal coming into New York session, since Asian session passed, London session has passed, and now we're into the New York session time. And like I said, this does look like a small M forming right here, and we could see a dump in price. But what are we focusing on? Okay, what are the confirmations? What do we see to make us believe that this could reverse? We see the M formation on the 800 moving average. What does that mean? When price comes above all moving averages or below all moving averages and creates an M or a W and reverses, that is a reset in the trend. So let's try and find an example for you guys. Here is an example where they reset the trend down and came back up. When I say they, I'm talking about the dealers, obviously. So let's try and find one where it's above the 800 moving average. Okay, here's a great example. We can see the big fat M right there came above all EMAs, and then the drop in price. So what are some other confirmations, and where would we want to sell right here? Well, we know that the second leg of the M is almost always very volatile. Why is that? Because when the market maker makes his M formation, he makes the first leg, right, as you can see here, and then on that first leg there's the support that all the newbies draw, the bait fish. I mean, that's basically what you're doing. You're baiting yourself. All these retail traders are drawing these trend lines and the support and resistance, right? And the market maker, the dealer, comes past, blows past your support. The breakout traders start to buy. Okay, we can see that right here. Breakout traders bought that. Also, any pending orders that were above there were activated as well. So what does the dealer do next? He then pushes price back down below the support line. So, or the resistance, whatever. So, what does this mean? It means that this is a perfect time for us to sell right here. When we can see this, when we can see these confirmations forming and see that the dealer has made the high of the day, we're in a time period in which we think price is going to reverse, we can definitely sell the second leg of a volatile M. And let's see the TDI. TDI is showing divergence as well. We can see the first leg of the M is way above the second leg. So, another confirmation that I have not talked about much, but is a very good confirmation to use in the second leg M formation, is wedge breakouts. So a lot of times the dealer will come up, create their high, and then form like a wedge pattern like this. And what does that do? Retail traders trade these wedges. So when a retail trader sees this, he will say, oh, check that out, that's a wedge. I know what I'm going to do. I'm going to buy the breakout or sell the breakout of the wedge. What happens? The market maker, the dealer, comes up. He breaks out to the upside. Why is that? Because he's already made the high of the day here, like we've discussed before. He breaks out. All the breakout traders that are trading this to the upside have bought the breakout up. So, what does that create? It creates a massive amount of liquidity here of buyers. And what is the market maker's job to do? What is his purpose? His purpose is to create a volatile environment and basically balance the marketplace out. So if there's a massive amount of buyers here, he will sell. He will be selling to those buyers because there has to be someone on the other side of the trade. And he takes the other side of your trade. So he has induced you to take the buy because you saw this stupid little wedge and your strategy is wedge breakouts, so you bought this. And that's exactly what he wanted you to do. Then, like we discussed, he pulls price down in one massive shift. He will take all the profit away from you. You will not have any time to move your stop loss. If you did move your stop loss, you were completely stopped out. So, why am I talking about this? Because we can see on the 1 minute chart, it does look like there was some sort of a wedge formation here that did have a big breakout to the upside to create that M that we can see here that is hitting the high, the pre-created high of the day that the first leg has created here. So, where would we want to sell? Well, at the first leg right here, you could have sold here, or you could have sold at that tippy top, or you could sell right now. I mean, the only difference is your risk reward ratio. On these trades, we want to have, okay, 1 second, you guys. I'm actually going to place this trade because it looks very nice. You want to have the best risk reward ratio that you can possibly get. Okay. So I have just sold right here. It looks like we're going to have a pair of railroad tracks. This candlestick could come down like this and create that shift bar out of the zone that we were talking about before. So, what is the purpose to all of this madness? The purpose is getting a trade with zero drawdown. The purpose is getting entries, sniping your entries, you guys. That's what you have to focus on. That should be your main concern when trading these. Getting that second leg of the M, that perfect entry. Because if you get the entry correctly, you'll be shifted automatically into profit, and you will not have to worry about drawdown. What I like about these trades is that if you get it wrong, you will be stopped out automatically. You'll be stopped out within 15, 20, 30 minutes to an hour. Okay, you'll be stopped out just like that. And there's no crying involved. There's no looking at your screen for hours in drawdown. That doesn't come about in this strategy. So, what else do I like about it? I like that you can place your stop loss. In this case, we would be placing our stop loss above the high. So, the high right here is at 143.7. To keep it safe, I think we could place our stop loss right about like 5 to 10 pips above that high. So we would have a 20 pip stop loss. You know what? You could even put it a bit lower, I would reckon. Right there should be good. That would be a 18 pip stop loss. And if you would have gotten in here or in here, you could have had a 8 to 10 pip stop loss. And that's what we're trying to get, you guys. If I would have been really focused, I would have seen this and just pounced on it like that. Caught that. But yeah, this is what we're going for. Your stop loss would be right here at that second leg, above the first leg. 5, 10 pips above the first leg. That is normally good. 13, 12 or 13 pips above the second leg, depending on how volatile the second leg was. Now where would you place your take profit? We're using the 50 EMA and also the 200 EMA, right? So our 50 EMA and our 200 EMA are our take profit areas, since we're going against the trend. The trend is up. We can see we are obviously going against the trend right now, and when going against the trend, you want to target the 50 EMA and the 200 EMA as your take profit 1 and take profit 2 areas. So a 42 pip take profit at the blue and a 75 pip take profit at the white EMA, depending on where they are at the time. That's just an estimate. But that's a 1 to 5, a 1 to 8 risk reward ratio if you have a 10 pip stop loss. And that's a great ratio, you guys. You're not going to find ratios like that anywhere else. So that's why you don't want to beat yourself up when you maybe get in at the wrong time and have your stop loss hit, or you see what looks like an M but it didn't have divergence or something like that. You mess up a little bit and it hits your stop loss. So what? Okay, it hit your stop loss. You learned something. If you don't learn anything, then yeah, it hit your stop loss and you should be crying because you don't know what you did wrong. But if you don't lose from time to time, you won't be able to perfect and get perfect entries and have the consistency that you want. So, with that being said, I believe I've explained a lot, and I don't want to make this video super long, so I will pause this video right now, and we'll get back to this once we see some more movement in our M formation, the cell, what looks to be an M. So, thank you guys for tuning in, and I'll be right back. Peace. We're back. Alright, back. We're a little bit late, but better late than never. So, as promised, we got that second leg and the shift out of the zone. We actually got the market maker, or the dealer, came up to the high again and continued working that high right before he shifted and hit the low with those three, or created that shift out of the zone and shifted under the 800 moving average now. So, like I said, I sold right here, about right there, but a better sell would have been right there, or even right there. But anyway, I was shifted right into profit, and then it came up, and I was at break even, like -1, -2, -3 or 5 pips. But then it finally, after about 2 hours of bouncing around, it finally shifted in 3 bars. 45 minutes, it shifted about 25 pips into profit. So that's what we're going for. We're trying to catch the shift in the zone before it happens. So now I have my stop loss at break even. So this will be a risk-free trade now. Right after I shut the camera off, or shut the recording off, I saw USDJPY coming up for basically the same scenario. It had the same M characteristic, M formation, and I got it right at the second leg right there. I took a screenshot right here. You can see where price was at the time, and I sold right there. I have a screenshot of where I sold as well, just to show you guys that, you know, it's possible. I'm not making this up. You can do it, okay? It takes practice, but it is possible. It's 100% possible. This was an instant shift into profit. I didn't go into any drawdown on that trade. It was an instant shift into profit, and look where price is at now. It came down back under the 800 moving average. You can see, just like on GBPJPY, the dealer created the M on the 800 moving average. And just like GBPJPY, USDJPY made the same M formation. We caught that second leg right at the tip, and that's exactly what we are going for. We caught the second leg, and we were instantly shifted into profit. Now, once we are shifted into profit, we can trade with basically no emotions. You can have an emotionless trading experience because you have been instantly shifted into profit and you won't have to deal with any drawdown. And once you place your stop loss into profit or at break even, you won't have anything to worry about and you won't be risking anymore. So, also, you are going to have trades like this that go and hit again, hit the high again or hit the low again. They make another leg up just to take out any sellers or buyers. If that happens, do not worry, because your stop loss should already be in profit or at break even at the time if you caught the shift before it happened. So, if price does come back up and you were waiting for the 50 moving average or the 200 moving average to be hit before you take your profits, it is okay, because you'll always have more trades, you guys. You can't beat yourself up about a trade that you thought would be perfect, it looked perfect, and then it turns out it made another hit to the high and it took you out after getting such a great entry. So, you can see there will be trades like that. There will be trades where, let's say this trade gets stopped out. Okay, I have my stop loss at break even right up there. So let's say it gets stopped out. Oh well, okay, I don't care. There will be a next opportunity to get a trade just like this. I took this trade last night. It was a perfect W, hit to the low. It was actually the characteristic was just perfect. I mean, it came up, it made that, you can see it made the wedge formation, and then it broke out of that wedge formation to with one bar and hit the low, and then bounced off that low with the railroad tracks to create that W formation. And I rode that up. I got out about right here at the right after it came off the 200 moving average. I believe I took 40 pips or so, but I could have rode it up 80 pips or so, but still a great trade. And that's why you don't have to beat yourself up when you take a trade at break even, or it hits your stop loss at break even, or when something like that happens. You're only hurting yourself when you are beating yourself up, because you know there's going to be more opportunities. You know there will be another opportunity to catch another second leg. They come all the time, and you're just hurting yourself. You're not doing yourself a favor at all. So just remember that, you guys. Just remember, when you're trading, do not beat yourself up. That emotion will build up in you, and it eventually will be just like this wedge. It'll build up, and then eventually your trading will just take a serious, horrible turn for the worse. So, if this M plays out really nicely, like we are hoping, or I should say this M, because this is the one that I started with. But if this M, if either of them play out nicely, I will have another part to this video showing you how the price went. I'm expecting it to continue down, possibly something like that, but we'll see. If we were to project the moving averages, we could expect possibly some type of movement like that. But for now, we have an easy 10 pips or so. Could have been 25 pips or so, but that's what we're trading, you guys. This was just an example, a live example of how to trade second leg M&Ws and what to look for. This is all. I mean, it's easy as that, you guys. There's no fancy indicators. You're not using some special powers or nothing. It's experience, you guys, and once you open your eyes to the bigger picture of what is going on, how the dealer works the highs and the lows of the day, of the month, of the year, okay? Once you realize how this is working, trading will become a lot easier. You'll have that shift in your perspective that you need, that is vulnerable, that is very crucial to your experience and your evolution as a trader. So, with that being said, I would like to wish you guys the best. Hope that you catch as many M's and W's as you can. Second leg, remember, second leg always has that volatility. So, with that being said, thank you guys for watching. If this does play out really nicely, we will have another part to this video. But if it doesn't, I want to say thank you guys for watching right now, and catch you later. Peace out. If you enjoyed this video, if you learned something, give it a like, subscribe. Check out forexcommunity.online. Peace out. Thank you guys for watching.